All right, let's dive into a really fascinating story from the world of semiconductors. We're talking about Texas Instruments' latest earnings report. You see, on the surface, the numbers looked like a bit of a miss, but the market? The market reacted like it was a massive win. So how does that happen? Let's break down this paradox. So here's the puzzle, right? For the fourth quarter of 2025, TI's results were just a hair shy of what Wall Street was expecting. Usually you see a miss, you expect the stock to take a little tumble, but that's not what happened, not at all. Instead, the stock shot up over 8% after the announcement, so what gives? I mean, what on earth did investors see that the rest of us might have missed in those headline numbers? They were clearly looking right past that small miss and seeing something much, much bigger on the horizon. Let's unpack the three big reasons why. First up, and this is probably the most important piece of the entire puzzle, it isn't about the quarter that just ended. Nope, it's all about the one that's coming up next. And here's the crucial thing you gotta remember. In the world of investing, what you're going to do often matters a whole lot more than what you just did. TI's optimistic forecasts for the future completely overshadowed that tiny miss from the past. It's all about forward momentum. What's really interesting here is the language they used. Their guidance for the first quarter of 2026 was stronger than normal. And management dropped this key phrase, slightly above typical seasonality. Now, that might sound boring, but to Wall Street, that's a huge signal. It's a wink and a nod that says, hey, demand is picking up. The recovery is starting. So a strong forecast is great, but it's not the whole story. Investors are also buying into a much bigger, long-term strategic shift that is fundamentally reshaping what Texas Instruments even is. And this chart just lays it out perfectly. Look at this. 3/4, 75% of TI's revenue last year came from just three places: industrial, automotive, and the booming data center market. We're talking about the tech that powers factory automation, electric cars, and of course the AI revolution. They have put their chips, literally, on where the future is heading. And believe me, this was not an overnight change. Think about it. Just over a decade ago, these exact same markets were less than half of TI's business. This shows a very deliberate, very patient long-term pivot that is now seriously starting to pay off. And you can see the power of that shift right here. Yeah, industrial and auto are growing nicely, but look at the data center business. It's absolutely exploding, up around 70% from the year before. Now that is the kind of explosive growth that gets investors really, really excited. Okay, so let's get to the final and maybe the most crucial reason for all this optimism. It's a massive bet TI has been making, not just on the market, but on itself. You see, for the last 6 years, TI has been on a massive spending spree, what the business world calls a CapEx cycle. Basically, they've been pouring billions into building new factories. But now, they're signaling that this intense period of spending is winding down. For an investor, that's music to your ears, because it means more cash is going to be freed up soon. All that spending leads us to this massive number, $4.8 billion. That's the value of the inventory TI has just sitting on the shelves. Now, for some companies, that might look like a huge risk, but for TI, they see it as a strategic weapon. They actually call it strategic inventory. See, their products last for a very long time, so they can stock up without worry. What does that mean? It means when a customer, say a car company, desperately needs a part, TI can ship it out immediately. Meanwhile, their competitors might be scrambling with shortages. In this industry, that kind of reliability is a game changer. And this is where it all comes together beautifully, by building their own giant, cutting-edge factories, or fabs, right here in the United States. TI is taking control of its own destiny. They don't have to rely as much on other companies. They control the costs, they control the supply, and they have a direct line to support their customers for decades to come. So let's tie this all up. Let's bring it all home. Why on earth did the market cheer an earnings report that, on paper, looked like a bit of a dud? You know, this one quote from TI's CEO, Haviv Ilan, it just says it all. We'll be ready for any scenario that the market wants to present to us. That is a statement of pure, unadulterated confidence. And investors, they heard that confidence. They looked at the strategy and they said, we agree. So in the end, the market looked right past the few pennies per share and saw the big, beautiful picture. They saw a strong outlook for the future, a brilliant pivot into markets that are growing like crazy, and a powerful long-term manufacturing strategy that sets TI up to win for years. And that really leaves us with this one big question for the future. Texas Instruments is playing the long game here. They're making a very bold, very expensive bet that the demand for semiconductors is just going to keep on growing. Is it a masterstroke or a costly gamble? I guess we'll just have to watch and see if they're right.